I'll recommend to actually check out Monday's show. So, anyways, let's start with the trend line here. So, I have drew this trend line ever since 126K. So, of course, this is the daily candle. And the reason why I'm watching this very closely is I'm seeing a huge resistance. So at the moment, we haven't even touched that resistance line. Let's see if we get rejected or not. But like right now, it's sitting at 93K. And this is a level I'm watching very closely. And especially if we bring out the region that I drew. So 90K to 92K or 93K, somewhere around this. So this little box is another huge support and resistance I'm watching very closely. In other words, Bitcoin is sitting at a very awkward stage. So there are not only we are trying to trade above this region that we have been like spending quite a lot of time below that. So like we have been below this region for 17 days. Let's see if we manage to close above. So not only this region, but we're trying to get above the general trend line. So this trend line that has been building ever since 6th of October. So 2 months. Let's see if Bitcoin, there is enough strength, enough narrative, because we know one of the strongest narratives out there is that QT has ended. We have the confirmation from Jerome Powell, and very likely we're going to get a rate cut on 10th of December. So it's going to be 25 basis point cut. I know this because according to Polymarket. So this is the level I'm watching. Let's actually quickly hop onto the weekly. Like again, I'm not spending too much time on the chart today because if you want deeper analysis, go watch the Monday live stream where I spent like more than half an hour analyzing where Bitcoin's heading to. So of course we're still in a bear market because if we put out the 50-week moving average, which is the blue line here, we have 2 weekly close below that, and Bitcoin has still some catching up to do, even reaching the 50-week. So another 10% for Bitcoin to even reach the 50-week. So even if we zoom out to the previous bear market, we have this like V-shaped recovery. Like we did find our resistance at the 50-week moving average. So for a relief rally, like I won't be surprised. Maybe like December we have a little bit like less pain compared to the previous two. Because if we look at the monthly return, like October and November, so far we did really bad. So everyone was saying we're gonna have October, myself included, but like technically speaking, we did see an all-time high of 126K in October. So October narrative and November narrative have been extremely depressing. But let's see, because like we dropped so much already, maybe we could end up having a flat December or maybe a positive December, like because we dropped so much already. So I won't be surprised, even for relief rally, we would try to get close to 50-week. And then according to the last cycle, maybe we go to the 50-week and then we found resistance and go back to the 200-week moving average. So maybe that's how going to play out. Again, like history doesn't repeat, but it often rhymes. So this is one thing I'm eyeing very closely, but like technically speaking, this is a bear market. There's no argument there. So let's go ahead and close the moving average and bring out the Ichimoku cloud. So this is a indicator that I love because it's leading indicator and it tells you the momentum, like whether this is a bearish momentum or bullish momentum. So like, how do you read this? It's basically, it's very simple. So you guys, if you're curious, you can just go to TradingView and do that yourself. So the Bitcoin price, so Bitcoin price is right here. And if the Bitcoin price is above this cloud here, that means it's a bullish momentum, it's a bullish setup. However, vice versa, if the Bitcoin price is actually below the cloud, which happened back in 2022 bear market, this is a really bad setup. So that means there'll be more pain ahead. And right now we're trading inside the cloud, and it kind of coherent with what I said, because like according to the previous bear market, we didn't just like go straight and below the Ichimoku cloud and found our cycle bottom at 15K. What we did last time was that we actually spent a few weeks, like more than a month actually. So spent some time inside this cloud. So that was like 112 days. So 3 or 4 months uh, was trading inside this cloud. So, in other words, like this kind of coherent with what I said. Maybe December, it doesn't have to be that bad. So my guess is maybe we're gonna like consolidate and trade sideways, and maybe we'll rally all the way up to 50-week and get rejected again. So this is what I see. And yeah, just bear in mind the three scenarios I always talk about, because like some people still think this is a bull market. So somehow, according to Tony, we're going to see a new all-time high of at least 150K by year end. Like I really don't see the probability being too high looking at a TA perspective. And then scenario number two is that we're going to trade sideways and spend some time inside the Ichimoku cloud. So according to the pattern we saw in the last cycle, looks like similar setup gonna play out in this year as well. And then the third scenario is that we're gonna go way below the Ichimoku cloud. But yeah, I mean, all scenarios on the table. But like, if you ask my personal opinion, looks like the sideways options, maybe like um, trading around this region looks like the most higher probability to me. Let's see if this month managed to close above 90K. Let's actually hop onto the 1 month chart. So last month we close at 90K. So like anywhere above 90K, we're going to have a positive, actually a positive close in December. So let's see how that plays out. So anyways, that's the TA part. As I mentioned, I don't want to spend too much time on TA because not much had changed compared to the previous live stream. If you want my prediction, just go to Monday's live stream. I'll advise you. So anyways, let's actually hop on to the global news I've prepared. So we're looking at NATO because this is huge. NATO just reviewed a plan that basically pulls $1 billion every single month into Ukraine's defense starting next year. Not a one-off package, not a symbolic pledge, but $1 billion every single month. Why now? Because Russia is making its fastest gains of the entire war, and Ukraine is running out of ammo. And while Donald Trump is trying to negotiate a peace deal directly with Putin, well, of course, no major breakthrough, but at least he's trying, right? NATO is doing the exact opposite, doubling down and preparing for a much longer war. So we'll break down why this is happening, what it means for the battlefield, and whether the war has any chance of ending soon. So let's get right in, okay? So NATO made this announcement, and here's the guy. So NATO Secretary General, so Mark Rutte, confirmed a massive new commitment for 2026. So $1 billion per month in US-made weapons for Ukraine through a program called PURL. So it stands for Prioritize Ukraine Requirements List. To put this in context, in 2025, PURL delivered $5 billion worth of weapons. In 2026, they are aiming for at least $12 billion, steady monthly shipments, no gaps, no politics blocking deliveries. This is different from NATO's 40 billion euro annual pledge. So PURL is specifically designed to keep Ukraine's ammo flowing in real time as Russia pushes harder. So why NATO is doing this right now? Because the war is in its most dangerous phase. Russia is maintaining control of approximately 20% of Ukrainian territory, is making slow but consistent territorial gains in key areas. And Ukraine continues to face significant challenges with manpower and basically supply. So, Ukraine, just put it bluntly, without stable Western aid, they will collapse. Russia, on the other hand, if we actually look at the Russian economy, like, okay, Russia, meanwhile, is spending $10 billion every month on war, 10 times NATO's new commitment, and just deploy North Korea troops while continuing heavy missile and drone attacks. So NATO's move is both a lifeline for Ukraine and a signal to Putin. They are not backing out, and even with US policy shifts. So where does Donald Trump comes in and his whole plan? How does it fit? Well, here's where it gets messy. While NATO is preparing for a long war, Donald Trump is trying to end the war fast by negotiating directly with Putin. So his team, Steve Witkoff, met Putin for hours on just 2 days ago. A revised 19-point plan was presented, cutting down concessions that were criticized as too pro-Russia. So far, there's actually no ceasefire, no deal on territory, no breakthrough. Donald Trump said progress is reasonably good, but even the US doesn't know where this is going. This creates a split screen right now. Like NATO said, prepare for years of conflict. Well, Donald Trump said, like, fix it now, possibly with uh, territory compromise. And yes, NATO increasing aid does contradict with what Donald Trump's his preferred direction is. Well, so I would say it does look like Donald Trump leaned toward Russia a little bit more. Maybe he's just trying to end the war a little bit sooner, but there's a heavy debate on the internet. So there evidence that Donald Trump threatened to cut Ukraine aid, and he's repeatedly praised Putin. But Donald Trump denies it and says he's simply trying to end the war fast. But like, I don't know, it almost looks like Putin has something on Donald Trump, but that's another discussion. Regardless of intention, the optics are very clear. NATO is bracing for a long conflict. Donald Trump is pushing for a quick settlement. So those two approaches don't align. Hence, there's an ongoing war. Even till today, Ukraine is hitting Russian oil depots and military sites. Russia continues missile and drone strikes. And of course, the peace talks kind of stall. There isn't much improvement, it isn't much updates, and neither side is trying to compromise. So if you ask me, is the war going to end anytime soon? It doesn't look like it's going to end anytime soon. This is actually a really hard question unless something dramatic changes, like a major breakthrough in diplomacy, a military collapse, or massive new negotiation pressure, this war is headed towards years, not months. So yeah, let's see how this play out. But like one thing very interesting I really want to touch upon is when it comes to the EU. Like right now, Europe just pulled the plug on one of the biggest energy relationships in modern history. Like after decades of relying on cheap Russian gas, even though wars, even through wars, sanctions, political crisis, the EU right now looks like they really want to phase out all the Russian gas by 2027. Like, yes, we talk about the EU economy in our previous show. Again, do watch the Monday's live stream because like I talk about I talk extensively about where Bitcoin is going, and I also zoom closer to each of the major economies around the whole world. And well, I'll just give it to you straight. EU is under a lot of stress. So out of all the developed countries in the world, looks like EU is suffering the most. So anyways, I strongly advise you to check out Monday's show. So let's come back to the EU cutting out Russian gas. So this is another step for the West to try to punish what Russia did. But honestly, like EU economy might actually suffer more than Russia. So what the EU just agreed to, so is that the government and the whole European Parliament reach a deal to ban all Russian natural gas imports, both LNG and pipeline gas. So LNG stands for liquefied natural gas. And when it comes to details, the short-term contract will probably end by December 2026, while the long-term contract, so the long-term LNG deals, the ban will start kicking in as soon as 1st of January 2027. As of the pipeline gas, they're going to fully phased out by September 2027, possible extension to 1st of November 2027 if storage targets are met, and also the short-term pipeline deals end much earlier, so around June 2026. So this also going to attack the Russian oil imports as well. This is basically Europe's attempt to break dependency that once made up more than 45% of its gas supply before the Ukrainian war. So, of course, not everyone is happy with this deal, and countries like Hungary and Austria, they get temporary exemptions because they are landlocked and deeply dependent on Russian pipelines. But even they must provide documentation proving non-Russian origin for imports. The EU can also pause the ban temporarily if energy security is at risk. And as I mentioned, some of the countries are really not happy, and Hungary actually uh, they have already filed a lawsuit against the EU over this. So why Europe is doing this is pretty straightforward. It's very simple. So Russia used to earn 20 billion euro a year from selling gas to Europe, and that money funds its war in Ukraine. Even after massive cuts since 2022, Europe still pays Russia 1.5 billion euro every month for gas. This deal aims to take that number to zero. At the same time, Europe is investing like multi-billion euro into LNG terminals, into renewable energy and new pipelines. So right now, the situation between the EU and Russia are at the worst point in decades, in a very, very long time. Russia said it's ready for war if Europe provokes it. The EU is rolling out its like 19th sanctions package. Europe is pushing to use like 90 billion euro in frozen Russia assets to support Ukraine. So yeah, I mean there is like no meaningful talks, no trust. Looks like it's just like this gas ban. This gas ban makes the divide even sharper. That's all it means. So as I always say, when it comes to geopolitics, there's never good news. So, did the EU really keep buying Russian gas after 2022? Yeah, long story short, yes. So that is the contradicting part. Like EU keeps saying, okay, it's horrible things about Russia, yet they just cannot cut tie with Russia, and they need that Russian gas because otherwise, where could they get it from? And I just find the whole thing as bizarre as it sounds. Even after the invasion of Ukraine, the EU kept buying Russian gas because it simply couldn't cut off 45% of the supply overnight. And Hungary, France, Belgium have been among the biggest remaining buyers. So why sanctions didn't apply to gas earlier. Because like gas was like untouchable sector, because cutting it immediately would have caused blackout or factory closures, economic collapse in parts of EU, so parts of Europe. So the EU sanctioned oil, coal, and refined products first. Gas was left out until late 2025, when the EU finally felt secure enough to take the hit. This new deal closes the last major loophole. So, does the EU have enough energy without Russia? So far, yes. For Europe's situation, renewable energy, it hit like over 50% of electricity in Q2. Solar panel, like solar energy, is booming. Fossil fuel generation is declining. There are still price issues, especially in Germany, but no energy shortages. One thing I find it really interesting is the Russian economy has shown surprisingly they're actually in a really good shape. So they are basically driven by massive government and military spending, low unemployment rate, and a pivot to non-Western trade partners like China and India. However, they're suffering at like high inflation rate, something ridiculous. So like they're sitting at 7.7% in October. And but like so far, it looks like it has been on a decline ever since March 2025. Like March, they're sitting at 10%, so two-figure inflation. That's not nice for the economy. But like point being, the the economy for Russia is actually quite good. Like it's still booming. And that's the ridiculous part. Like the EU is trying to fund the war, but yet they keep paying billions of dollars to Russia, and Russia have the money to attack Ukraine. So there's like a constant loop. Yeah, I mean, it's very complicated when it comes to geopolitics stuff like this. Russia, yeah, I mean, according to the GDP growth sitting at 4.1%, that's a really good, that's a nice looking number, and especially under sanction like this. So, of course, the EU gas ban would tighten the pressure. Let's see if Russia oil revenue would fall, like especially after the gas ban. This deal doesn't collapse Russia overnight, but it hits long-term stability, I would say. So, yeah, let's see how this plays out. And moving along, we're also going to take a look at the prediction market. But before we dive in, let's actually take a little break, because there was a lot of data and too much bad news in just half an hour. So let's take a 3-minute break, and I'll see you guys in a bit.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back. As I promised you, we're going to take a deeper dive into prediction market because they just got hit hard. And what happened is that overnight regulators order Kalshi and Robinhood and crypto.com to hold unlicensed online gambling, basically shut down all the prediction market. And this isn't just a local fight. This is the first real test of a much bigger problem, of a much bigger question. Like, are prediction markets the future of finance or just sports betting with better branding? And depending on who wins this battle, this could reshape crypto or betting or trading and even AI-driven forecasting platform in the US. So what actually happened? Let me break it down simply once and for all. So, who are being targeted in this news? Of course, those like sports event contracts, like will Team A win? And then they could vote and actually place a bet. So those type of markets we're talking about. And Connecticut right now, what they're claiming is that only DraftKings or FanDuel are permitted to offer these kinds of wager in this state. So in Connecticut. Everyone else, including prediction markets, is practically breaking the law. The orders demand immediate shutdown of those markets for Connecticut users. Full fund withdrawals allow for affected residents up to $25,000 per valuation if the platforms don't comply. So this is not small. These are billion-dollar platforms suddenly being told to pack up and get out. So this fight, of course, it matters very deeply. Connecticut right now is putting it very simply, like if money is being risked on a sports outcome, it is gambling, period. Like, I don't know how you feel this, but like, I don't know, like if you're betting money on a sports game, it makes sense. Like I could see where this is coming from. But prediction markets like Kalshi, of course, they don't like it. They're like, no, these are federal derivatives regulated by the CFTC. States do not get to decide this. So this becomes a federal versus the state showdown. Within 24 hours, Kalshi hit back with a lawsuit, so arguing federal law overrides state gambling laws. These contracts aren't casino-style bets. They are risk hedging tools. Connecticut doesn't have the authority to shut down a federal licensed market. Well, of course, like Robinhood and Crypto.com are affected by this, but they haven't filed a lawsuit yet. But both claim they are operating under federal rules. This is the first major state attack on federal supervised prediction market. So are prediction markets just gambling? To the state, so to Connecticut, if you're betting on a game for fun, that's gambling. To the platform, if you're trading contracts to forecast outcomes and hedge real world risk, that's a financial market. Both sides see the same product completely differently. And honestly, actually, most American people can't tell the difference either. When surveys ask, people say prediction markets feels like sports betting in a suit. So yeah, if you ask me, I do feel the same. But anyways, where the crypto comes in, like I said, this crackdown doesn't just hit Kalshi, it directly affects Crypto.com's event contracts, it affects Robinhood predictions products, and indirectly the entire crypto prediction ecosystem. That, of course, include Polymarket, which just got a new CFTC destination to re-enter the US legally. If like this fails the court, states could go after every prediction platform, even blockchain-based ones. If federal law wins, prediction markets could explode into multi-billion dollar sector overnight. This is why the industry is watching Connecticut very closely. But like whether prediction markets are a gamble or not, one thing I spotted very interesting, so this just happened 2 hours ago and being shared by Cointelegraph, is that okay, a poly market trader flipped from $12 into $30,000 by correctly predicting 11 straight short-term Bitcoin moves. So do you think this is a gamble? I don't know. Or is it just hedging? Yeah, I mean, opinions are open and up in the air. Let's move on to the next news I want to cover is about Ledger. So it's about security. One thing very interesting and you guys probably need to be aware, and especially if you use a certain brand, a certain phone, then your crypto might be under attack. So this is how serious the whole thing are. So Ledger security team just found a major flaw inside a very common MediaTek smartphone chip. And the flaw is so deep in their hardware, it cannot be patched. If your phone uses this chip, so this chip is the MediaTek Dimensity 7300 chip. So this is the chip. What it means is that if your phone uses this chip, a thief could take full control of it at the hardware level, even if it's locked. So let's break down what this means and what happened. So this is this chip, so this 7300 chip is a widely used mid-range and Android chip. It's fast, it's efficient, and it's inside phones from brands like Oppo or Vivo. It handles everything on your phone, so apps or camera or graphics, the OS. And deep inside, it is the part that starts the entire systems, that the boot ROM, so the boot ROM. That's where Ledger found the flaw actually. So the vulnerability that lies as the key issue sits inside the boot ROM, which is the first code your phone runs when it turns on. This code lives at the higher security level, meaning it controls the entire device. And what the problem is right now is that Ledger found a way to bypass the memory protections in this chip and read any part of the memory, hijack the execution flow, and execute arbitrary code with full control. Once someone reaches this level, they basically own the phone. And how the attack happens, so how does it work? This is not a remote attack, so don't worry. Like the attacker actually needs to get a hold of your phone. But once they have it, the method is rather straightforward for anyone with the right tools. So how Ledger found about this hack is that first of all, they just need to open the phone and connect to debug pins. This lets them communicate with the chip during boot. And then normally the chip will blocks access to sensitive memory. Then comes the trick. That's the attack. A preciously timed electromagnetic pulse makes the chip skip its security checks that would open the door to everything. So dump the entire boot ROM or read secure memory, overwrite return addresses. Ledger's team pulled this off repeatedly using open source tools and a simple setup. The whole thing takes minutes once the device is opened. So this is why it is so scary. And if you have crypto on the phone, yeah, like you're exposed to a lot of risk. Because the flaw lies, this flaw lives inside the boot ROM, which cannot be replaced or updated. It's not like an app or a bug. It's not like a firmware bug. This is silicon, so it baked forever. Every phone with this chip, so remember this chip, so Dimensity 7300 chip. So every phone with this chip stays vulnerable for life. Any smartphone using this chip, so usually brands like Oppo and Vivo, you guys need to be aware about this. If you want to check whether your phone is using this chip, just go to About Phone and go to Processor just to confirm if your phone is using this chip. So, of course, like why does it matter? For crypto users, if your private keys ever touch the phone, even inside Sandbox Wallet, so inside the Sandbox Wallet apps, a skilled attacker could potentially extract them. This is the exact kind of attack hardware wallets were built to prevent it, like where phones are not. So how so this company MediaTek, how did they respond? So their stance is that, okay, the chip was never built for some crypto security. Like it was never designed to resist physical hardware attacks. They have notified phone manufacturers, but like there's no patch. There can't be one. So Ledger's message is like, okay, isn't throw away your phone. It's simply like don't rely on consumer phones to secure private keys at a hardware level. So it's indirectly shielding the product, I would say. But like this is a serious thing we have to bear in mind, and cybersecurity is more important than ever, especially if you guys are watching this show. Then it comes like there's a lot of risk exposed to you guys. Okay, what we're gonna do is that we're gonna dive into more risk management and risk management maybe for cold wallets as well. So we're gonna take a little break, and after that, we're gonna look into the Typo fire, which happened last week in Hong Kong and caused the death of at least 159 people, and how we could make sure to keep our Bitcoin, our precious Bitcoin metal, Bitcoin digital assets safely and in events like this, and basically these type of like unpredicted events. So let's take a little break, and after that, I have a new guest joining my show today.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of
佢唔係過嚟
losing?
㗎？
Losing Bitcoin.
哦
No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Is Dr. Noah Silverman. Well, he specialized in modeling complex systems. He has been involved in Bitcoin since 2011. He's also the director of BAHK and teaches annual course on financial engineering for cryptocurrency at HKU. So welcome, Noah, to the show today. How are you feeling?
Hi, Jeremy. Thanks for having me.
Yeah, great to be here. Thanks for hopping in. Well, actually, what I meant was that since this is your first time on the show, why don't we start by a little bit of background about yourself, like who you are, how did you get into the whole academic statistic into risk modeling and AI?
Sure. When doing my PhD at UCLA, Bitcoin was a brand new thing we were just reading about on some of the message boards. And I thought it was fascinating and a really interesting take on money. So I started using some of the Bitcoin data for the projects I was doing in grad school and a lot of the financial engineering we were developing. And that led to me speaking at a few of the earliest Bitcoin conferences and getting involved in the community back in 2011, 2012.
Well, one thing I noticed that you said quite consistently is about some less wrong philosophy. Could you dive in a little bit more about that? Like, what do you mean? Do you mean like constant data back testing? What do you mean by less wrong?
Okay, that's a deep topic, but I'll try to give you something short for this interview. Uh, when we model things in the world, whether it's just your mental model of how things are going to be for your afternoon, or the weather report on TV, or the price of a stock, or the technical analysis you're so fond of doing here, we don't know everything and we can't see everything. There's a famous quote from an old statistician that is, all models are wrong, but some can be useful. So my perspective is when you're modeling something in the world, you're not going to be correct. You're probably going to be wrong, but the goal is to learn as much as you can so that you are less wrong. And constantly iterating to be less wrong is the best we can do.
Well, that's really helpful because I know one thing you're really good at is calculating probability. And as you mentioned, I love doing TA. And so far, I kind of want to dive into that a little bit. Like, so for your past experience, have you come across any model more useful than others? And what's your personal take on TA?
I frequently call TA the astrology of finance. No offense, but it seems like making up narratives to fit past data. Uh, and when we do deeper studies on it in the academic world, it almost never holds up to rigorous analysis. So I'm not a fan, although I know a lot of people use it. I think what you see happen is if you have 100,000 people trying TA, some people will get lucky just randomly and then will be very happy that their model, quote unquote, works. But it's more just survivorship bias than rigorous testing.
Yeah, I mean, TA or everything, all the models, it boils down to the probability calculation, and it applies to risk management.
Mhm.
And one thing I really want to spend some time to discuss about is that since we're both in Hong Kong, and there was a really horrible event took place last week. So being the fire incident in Hong Kong that took at least 159 lives. So the reason why we have this uncontrollable fire was that the construction buildings, they somehow chose the flammable materials and there was a bunch of human error as well. So I really want to spend some time and dive into the physical disaster and how that would affect our basically self-custodian, self-custody method. Like, what's your take? And after seeing a horrible event like this, like, are you scared of self-custody because of what happened in Hong Kong?
Well, to start, my condolences and deepest sympathy for the families. It was a horrible event and should not have happened. Uh, but you're right, it does lead to us thinking about risk and thinking about custody. And going back to the concept of less wrong, there is no perfect solution to custody, something like Bitcoin or other cryptocurrencies. Uh, what we can try to do is be better. And usually that involves a series of trade-offs. There is no perfect answer. It's a question of which bundle of trade-offs you're willing to accept. Some of that comes down to education and learning. Some of it comes down to personal preference for which risks you will not accept and which risks you will.
So you mentioned being less wrong, but how, like, is there any practical method that we could take when it comes to self-custody? Like, is it to diversify into different cold wallets? So basically, what is the actual practice we can take right now?
Well, there's a few things you have to consider. There's always a trade-off between security and convenience. And the other dimension you have to consider is the sophistication of the people that want to self-custody their tokens. Some people are very sophisticated engineers who can execute really complex strategies to have more security. But a lot of people are beginners or not technical at all and just starting to learn about this crypto world. So they won't have the knowledge or skills to do some of the more complex solutions.
Yeah, I mean, for myself, I would diversify into different cold wallets. And um, not to mention, when it comes to cold wallet, we always like when it comes to educating others, we keep stressing about writing down the seed phrase on a piece of paper and try not to upload that on your phone on iCloud. But well, what happened last week in that horrible fire event, like everything was banned. So, do you think that is still a good solution for self-custody? Or maybe a better solution for a lot of folks out there is maybe ETF, Bitcoin ETF?
It's a good question. Uh, to start in computer security and also in risk, the first thing you need to do is what's called a threat model. So you have to think about what am I protecting myself against? In very simple summary with cryptocurrency, there are two main things. One are hackers and criminals. You don't want someone to steal your cryptocurrency because, as we all know, once a lot of it's stolen, it's very hard to trace and very hard to recover. The second issue, of course, is physical risk, right? If there's a fire or a flood, or your hardware wallet gets lost, or your phone gets stolen, even though no hacker stolen your funds, they're essentially lost forever. So you have to model both dimensions or think about both. Cold wallets are great, but if your cold wallet is sitting in your flat, it will prevent a hacker from getting your funds. But if there's a fire, your cold wallet will melt in the fire and you have not mitigated that risk.
And I know there are different options out there. So the ledger most popular option is just to write the seed phrase on the piece of paper, but there are also metal backup as well. Like, are you a big fan of those metal backups?
Uh, Two things on that. One, Ledger Wallet actually has a new service that I have not tried, so I don't know the details. But apparently, they will store an encrypted backup for you as a annual service you pay a fee for, and they claim that they are hacker proof and they won't access your wallet. But if things melt in a fire, there is some recovery process with them. Again, I have not tried it. When it comes to seed plates, some brands survive fires better than others. Uh, there's a website, I think Jameson Lopp, who's a famous Bitcoin innovator, did a huge round of tests on all the different brands. If you Google, you can find it. And some hold up better to acid, some hold up better to fire, some don't. So before you buy one, it's worth looking. The problem with seed plates and metal backups is if someone steals that, they have your crypto keys and then the human can steal your funds. So you want to consider the other dimension of risk.
Yes, I agree. Because when it comes to the still seed phrase, I've tried different options. So it's not only Ledger, but Engrave is a popular one because they have a hole punch for you to punch those hole in for the seed phrase, and the whole thing gonna take like at least 10 minutes. But like from what I've seen, especially last week, maybe like sometimes it does make sense to value security over convenience sometime. So anyways, I want to touch upon multi-sig as well. So do you think multi-sig would also help during disasters like this? If for beginners out there don't know about using multi-sig, what's your advice?
I think multi-sig is a great solution for a lot of different risks. The challenge is it's more sophisticated for people who aren't technical. There are a few companies now that will offer multi-sig as a service and will hold your hand walking you through that. I have not tried any of them, so I don't know which are good or bad, but that's probably an easier on-ramp to multi-sig for less technical people. Uh, I've seen some very sophisticated models where someone will take a multi-sig wallet and give one copy of or one version of the signature to their spouse, one to their lawyer, one to their CPA, have a backup, another backup in a bank vault, maybe have another signature with a relative who's living in another country. I know Vitalik from Ethereum, he claims that he's got sets of seed words with friends around the world, so that if he got dropped off in the desert with nothing but a cell phone, he could call enough different people around the world and gather the pieces of the multi-sig and get back to his funds. So there are a lot of interesting solutions like that. But to your earlier point, I think writing your seed words down on a piece of paper and leaving it in your flat is probably the worst way to back up your funds.
And I wonder right now, how do you self-custody your own Bitcoin? Like, do you use multi-sig, and do you like punch that hole on that steel piece as well?
Respectfully, for security, I never talk about what I do with my funds. I can only suggest other people's strategies.
Okay, okay, got it. And when it comes to human mistakes, because like most of the crypto or Bitcoin are lost because of human mistake.
Mhm.
So how should people design their self-custody setup to protect against human errors, maybe like forgetting or misplacing or some bad storage?
Oh, the first step is, unless you're a very experienced crypto engineer, you probably should not devise your own solution. There are a lot of unknown unknowns. You should follow some well-vetted pre-existing template or workflow. You can find a bunch online, but don't invent your own. Um, I like something called Shamir sharding or Shamir secret sharing, where you can take one crypto key, split it into multiple pieces, and kind of like a multi-sig, but it's for signal signature. So you can say there's 5 pieces. I distribute those 5 pieces to 5 people I trust, and I need 3 of them in order to restore my funds. So things like that are nice to do.
Yes, that's really good advice. And as for the event that took place last week, after Taibo, what we have witnessed is that there are fake donation links appear online. So I wonder what's your take on like spotting scams like this, and especially during chaotic events.
So we've had scammers and con men around since the beginning of time, long before cryptocurrency. The challenge, or the good thing about cryptocurrency, is it enables very fast, very efficient transactions globally almost instantly. The problem is it allows very fast, very efficient transactions globally and with a high degree of privacy. So, yes, whenever there's something new in the world, whether it's a new technology, a new NFT, a new celebrity, a new disaster or charity, scammers will come. Uh, my only advice is you need to be very careful about where you're donating. Check websites. If you get a random email or an SMS to your phone, it's probably fake. Legitimate charities won't do that. Do your homework first. Find out who it is before you send any funds, and be very careful with that.
Yes, I agree with you. Like, we need to be careful with our precious Bitcoin more than ever. And
Mm.
I'm speaking from personal experience. Well, I kind of move on to the next question. And I figure you are one of the best folks I could ask this question to. We know there's this like so-called rising threat to Bitcoin, which is called quantum computing. What is your take on quantum computing? Do you think it's actually a real threat to Bitcoin anytime soon, or something far in the future?
Theoretically, if quantum computing ever reaches its ultimate goal, it will be a threat to the existing Bitcoin encryption technology. But I think that's far in the future. I don't think it's a legitimate threat in the next few years. And the Bitcoin engineers are very, very smart people. And the cryptocurrency world is composed of a lot of very smart people. And we're all aware of this threat, and people are actively working on it. And there are patterns and protocols for quantum resistant encryption. Bitcoin doesn't have it yet, but I'm fairly confident that we'll have that in place before it's a threat. Some of the other newer cryptocurrencies in layer twos already have quantum resistant encryption. So it's doable. It just hasn't gotten to us yet.
Yes, great. I love that because like it seems like the quantum computing threat, the whole thought, is just like it recycling every single year. People talk about that every single year. Much similar to the Tether FUD and the China FUD. Like somehow people will still believe that. So last piece of advice I want to get from you, like what's your advice you would give to Bitcoin holders to stay resilient against both physical disasters and cyber threats?
Okay. a few fundamental pieces of advice. Your seed word or private keys should never be on any device that's connected to any network or has Bluetooth or Wi-Fi or anything on it ever. You should have a physical backup, and the physical backup should not be in your house. Put it in your safe deposit box if you have one. If your attorney or your CPA has a vault in their office, have it locked up somewhere. Metal seed plates are great. Again, it's the same as writing it on paper. If someone gets it, they can access your funds. So make sure that metal seed plate is somewhere that's locked and secured. Or, as I saw one person do, put the backup words on your metal seed plate wrong. Switch a few words or swap out a couple words that only you know. So in the chance that someone does steal your words, they won't be able to use them. Have a embedded secret in there for yourself.
All right, guys. So you heard it from Dr. Noah Silverman. So thank you so much for sharing your insights with us today. Really appreciate your time.
My pleasure, Jim. Thanks for having me. Are we off?
Not yet.
Okay.
Somehow.
I'm calling the operator, but it doesn't respond, so we're still alive.
Okay.
I'm going to say hi to Jimmy's channel.
Come say hi, Sherry.
It's awesome.
Okay. Too bad. That's fine.
You sound so sick.
I feel a little sick.